Welcome to It's the Economy. Even as the Nifty touches all-time highs, today we are looking at one sector that has printed a lot in the past month, in June. While Nifty moved 2% in June and the mid-cap index has moved a little over 4%, 4.9, NBFCs like Piramal, L&T Finance, MMFSL, PNB Housing have all risen between 10 and 20%. I didn't mention Chola in that list, but Chola this year, that is 2023, has risen 51%. What's going right for NBFCs, and will the run continue in the medium term? To answer these questions, I have with me two stalwarts, Deepak Shenoy, founder Capital Mind, and Digant Haria, the co-founder at GreenEdge Wealth Services. I still think of Digant as the last word in NBFCs because of his previous avatar. Digant and Deepak, thank you very much indeed for joining me. Deepak, first to you, and let me just ask you an out-of-syllabus question. This very big, nifty move today, well, actually, the move is not big as much as the fact that we are at all-time highs. What's the sense you're getting? Last time we touched all-time highs, and then for 10 months, or 8 months, we shied away. Do you think now it looks good, like we may be touching all-time highs practically every day?
It sure should, Lata. In fact, just as there is a behavioral pattern, and many people in the technicals call it a resistance or a thing. But the idea is simply when the markets make a high and go down a lot of sentiment goes towards, oh, if I'm back to break even when I bought at the top, when I'm back to break even, I will sell. So that's what causes selling pressure typically at these points where the markets have reached an all-time high a long time ago, maybe 16, 18 months ago. In fact, the last time it hit the high was only in December last year, but that was a high made after about 6 months ago. I think just behaviorally we're at that point, but earnings have gone up 15%. So markets do deserve to be revalued upwards a little bit at least. So I think once we break through, we should be in what is uncharted territory, but technically, it's just earnings playing its role.
Oh, absolutely. And earnings well supported by economic growth this time. Digant, now to come to NBFCs itself, they have played a spearheading role in the current month, in June. What is your sense, just first overall? Do you think NBFC stocks have more legs to run before I get into details?
Yeah, hi Lata. Thanks for having me on the show. On these NBFCs, we all know that, right? NBFCs lend to customer segments who are, say, 1, 2, or 3 notches below what banks would call as credit-worthy customers. So it was very logical that, when in COVID hit the economy, the pandemic damage was much more to the segments where NBFCs were lending and much less to the segments where banks were lending. So we saw that 2022 was the year when most of the banks recovered from the COVID losses or the COVID shock. I think the customers of NBFCs, it's last 6-9 months that we have seen a very good recovery in their own cash flows, in their own incomes. So I think, NBFCs will probably be the trade for 2023 as banks was for 2022, just because of that lead lag effect in terms of the customer profile. So I think, yes, NBFC rally does have a lot of legs. Balance sheets have been cleaned after ILFS, now COVID. So balance sheets are reasonably strong across, right from the stocks that you mentioned, be it a PNB Housing or be it L&T Finance. I think huge cleanup has happened, like thousands of crores have been written off. And now we are in a period of good demand, good credit cycle. So I think the macro setup for NBFCs really looks good in terms of the rally continuing, in terms of earnings and, eventually in the stock price as well.
Oh, yes, some of the mammoth blunders were cleaned out with ILFS and DHFL and even SRE to some extent. And some others have been taken over by large houses like Poonawalla. So, capital has come into the sector. Deepak, what is your sense? As Digant clearly points out, banks lend to the safer customers and the NBFCs take that little more level of risk. Does this growth look, a little more widespread to you? And therefore, this more risk is going to be beneficial. Would you say, therefore, the rally has legs, the NBFC rally?
So Lata, I mean, I would say if the thing was more broad-based, then you would see gold and microfinance companies also do a substantially better deal. But since April, even the mid-cap index has done about 17%. And some of these
Yes.
stocks have gone up 45, 50%. I think L&T is about nearly 50% higher. I think there has been a broad-based rally. So some part of it is just, wind beneath the wings, there's just the tide that all boats. But there's also perhaps some impact, and I'm speculating here. Honestly, I don't know enough to say I know this for sure. But there is a big NBFC that's going to become a bank, which is HDFC itself. The space that it leaves room for some of the larger NBFCs to take a role in land-based lending. A lot of startups were eating up into the relatively affluent lending space for the short term. So, technical digital lending and so on. They have been affected by a funding squeeze and perhaps other issues with respect to lending practices. So when they vacate that space, that also affects and impacts and positively benefits some of the other NBFCs in play.
Okay.
Having said that, there are a bunch of risks as well. I think as we go along, we'll see it. RBI has also mentioned unsecured personal loans have grown at one of the largest rates among all the bank credit growth itself. So, and loans to NBFCs also have grown at a scorching pace, as much as 30%. So, to a certain extent, that could also be a build-up because growth usually comes first, NPAs come later. That's the risk that's involved in the NBFC sector in general. But hopefully, the larger NBFCs will benefit. And they're still much lower than their 2007, 2022 or 21 highs. So perhaps they're just making back that loss right now.
I don't know if you want to choose to talk stocks specific, Deepak. I think both your points are extremely well taken. Lending to land, buying land is something which HDFCs exiting the space opens up, as well as some fintech companies, if they go out of business, and some have, at least big lending business, that opens up. But what's your preference for the pack? Bajaj Finance is always an expensive stock. Chola is moving into expensive terrain. Do you stay with the expensive? What's your pick of the pack?
That's a good point. Lata, I have actually moved or gravitated towards banks and larger banks here because their cost of capital is lower. The interest rate cycle has been a little bit, has made credit a little more expensive. I think also from April, there's been a lot of easing of liquidity. We thought liquidity will get more expensive, but it hasn't. And in fact, even now the system's running a little bit of surplus liquidity. So rates haven't gone up, but I do feel that there is potential that spreads between what banks can borrow and what NBFCs can borrow will widen a little more. It will squeeze out some of the net interest margins. And some of the positives about whatever happened in COVID usually takes a 3-year or 4-year lag to kind of hit NPA part. So I'm away from the NBFC pack. Perhaps I will regret this. I'm sure some NBFC will be wrong.
Let's see if Digant has another point of view. Digant, banks have been the flavor of the season, but right now, do you think they hold an edge over NBFCs?
I think Deepak's point is well taken. That in the very long term, the deposit franchise of banks, there's nothing which matches that. And as technology improves, banks keep on penetrating deeper and deeper into the turf of NBFCs. But that's really the call for long term for me. In the interim, or say, if I think of 1 or 2 years, I think the credit cycle itself is so good. The availability of funds, the balance sheets are so good that I think, the NBFCs, the ones which were under stress until COVID, see the Bajaj, Chola, these have always been the blue-blooded NBFCs. They will do well irrespective of the cycle. But then there's a whole host of, companies like MMFSL Finance, L&T Finance, PNB Housing, the Manappuram Muthoot's of the world, all the microfinance companies in specific. I think they are going to show you ROAs which we have not seen in the last 5 to 7 years. And when earnings are so strong, markets and people tend to forget that these are cyclical upturns in these companies. A lot of these companies are cyclical because of their segments are cyclical itself. So cyclical upturn is there in 1-2 years. We can't, the markets will celebrate that for the next 1-2 years. Lata, we've always seen that microfinance companies, even today, have reached 4 times, 5 times book when everybody knows that these are cyclical highs in terms of earnings and ROAs that we are seeing, but still the market wants to give a cyclically high multiple. So I think in the medium term, my bet would be more on NBFCs than on banks. But long term,
And which
I
ones?
think banks.
Which ones among them, Digant? Would it be gold? Would it be MFIs? Or would it be the well spread out ones like the MMFSL, L&T Finance?
So Lata, I think there are two sub-segments where, the macro, micro, everything is doing very well. So one, of course, is the microfinance space. That's because the 2 years of cleanup and no lending really happened between 2020 and 22. So microfinance space, I think, still has around 9 to 12 months of, a good macro setup. So the good companies will definitely post great numbers. And the second sub-segment is commercial vehicle finance. So CV finance, I think, is a segment where the used commercial vehicle prices have gone up by 30-40%. So, when the asset prices go up so much, there is very little chance of NPAs for many, many years. So I think the CV cycle is also very strong. So these are the two pockets which we really like. So like an MMFS is at the intersection. L&T Finance is sitting at the intersection of an MFI and a vehicle finance. Shriram Finance is somebody, who will probably be able to deliver good earnings. So I think there's a lot of opportunity in this space. These two are really strong spaces. Apart from that, gold has a lot of competition which is set in. So gold may do well, but overall, I think banks are still eating up a lot of pie of the NBFCs there.
That's right. They have come into that terrain. No taking away from that. Digant, Deepak, unfortunately out of time, but thank you very much for this 360-degree perspective. Deepak leaning towards banks, but Digant saying that NBFCs have a good few more years, and within them, MFIs and CV lenders and those companies which do both of that are his pick. Thank you very much for joining us and also for being with us on what's a very big moment for the markets, reclaiming that 18,887 and going on to 18,900. 19,000 is just a shout away. We wrap up on Bazaar on that note. Chartbusters update.